Hey guys, it is Julie here with TipRanks, and today we're taking a look at two tech stocks that are picking up ratings from some top-ranked analysts. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we use the TipRanks Analyst Top Stocks page to find two tech stocks that come in with a strong buy consensus, including buy ratings from some 5-star analysts. So we're going to take a look at these companies, what it is that they do, and of course what Wall Street is predicting for their stock's future. You can find these top analyst stocks under the Investment Ideas tab on the TipRanks website. Here you'll see sectors that are picking up the most buy ratings from analysts and a list down below of the top analysts' most recommended stocks. And of course, don't forget to make sure you've downloaded the TipRanks mobile app so you can access all of your favorite investment research tools on the go and access the wisdom of over 8,500 Wall Street analysts. Links are in the description down below. Now let's get right into our two tech stocks. First up, we're taking a look at MongoDB. Their stock trades under the ticker MDB, currently priced at $390 per share, and they've seen some fantastic growth this past year, overall up 145%, including 12% here in the last 3 months. Their stock does score a 9 out of 10 on the TipRanks Smart Score. MongoDB is a well-known developer of high-end database systems. Their flagship product, MongoDB Atlas, is designed to work with users, allowing customers to use data in their own ways, using their own preferred coding languages with the best support available, adaptable to customer needs, and offering built-in security features. Since releasing their products more than a decade ago, the company has seen them downloaded hundreds of millions of times and has watched their consumer base expand to tens of thousands across 100 countries around the globe. They'll be sharing their Q3 earnings report in just a few weeks on December 5th, and this follows a big beat back in August where they nearly doubled earnings expectations. For their Q3, analysts will be anticipating earnings per share of 51 cents, which is a big increase over last year's 23 cents. But looking back at Q2, analysts were anticipating earnings of 46 cents, and they blew that out of the water with 93 cents per share. Revenue came in at $423.8 million, which was up 40% year over year, and they had over 45,000 new customers as of July 31st. A 5-star analyst from Wells Fargo just recently initiated coverage on the MongoDB stock, and he rates the stock a buy with a price target of $500. They see MongoDB as the best AI play in software infrastructure given their ever-expanding list of new workloads. They said that the company is well-positioned for solid margin expansion, which in turn will drive strong free cash flow growth. Overall, MongoDB has 28 current analyst ratings, coming in as a strong buy. With 24 buys, 3 holds, and 1 sell, the average price target of $436 would be an upside of about 11.5%. Down below, we can see more recent ratings from October onwards, with a low-end hold and a downside of 14%, and a high-end price target coming from Wells Fargo at 27%. Our second tech stock today is Snowflake. They trade under the ticker SNOW or SNOW and are priced just shy of $162 per share. They've seen growth of 10.7% over the past year, including growth of 9% in the last 3 months, and currently score an 8 out of 10 on the TipRanks Smart Score. Snowflake is a prominent data warehousing company. They're known for revolutionizing the way organizations store, manage, and analyze their data in the cloud. Snowflake offers a cloud-based data platform that provides businesses with a scalable and flexible solution for their data needs. Their key innovation lies in their architecture, which separates data storage from compute resources, allowing users to scale their data warehouses dynamically according to their specific requirements. This unique approach has made Snowflake a preferred choice for organizations looking to harness the power of data analytics without the complexities of traditional on-premises data warehouses. Snowflake will also be sharing their Q3 report here soon on November 29th, and once again they'll be following a pretty solid Q2 earnings beat. For their third quarter, analysts are anticipating earnings per share of 16 cents compared to 11 cents in last year's. Looking at their Q2, they came out with an earnings beat at 22 cents, more than double the anticipated 10 cents per share. Revenue came in at $640.2 million, which did grow 37% year over year, and the company now has 402 customers with trailing 12-month product revenue greater than $1 million. A 5-star analyst from Evercore recently increased their price target on the Snowflake stock. They noted that IT budgets are set to move higher, and the firm believes the platform companies remain well positioned to take share. The firm calls Snowflake their favorite growth idea. The Snowflake stock also has 28 current analyst ratings, coming in as a strong buy. With 23 buys and 5 hold ratings, the average price target comes in at $194, which would be an upside potential of nearly 20%. Down below, we can see all of our recent ratings here are in the double digits. Even our holds have upsides of 20% and some high-end price targets above 32%. So there we have a quick look at 2 tech stocks coming in with overall strong buy ratings, including some price targets from 5-star analysts. Let me know your thoughts on these 2 companies in the comments down below. I always love hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.